I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Hey everyone, welcome back to the channel. The US market experienced another eventful week with key economic reports and developments shaping the investor sentiment. Here's a quick summary of what drove the market this past week and what to expect in the days ahead. Let's begin the recap of this week's economic report on a positive note. The Federal Reserve's preferred inflation gauge, the PCE index, showed core inflation eased to 2.6% year over year in January. This aligned with expectations and provided some relief to concerns about rising prices. On the negative note, President Trump's announcement of tariffs on Canada, Mexico, and China reignited fears of a trade war, putting additional pressure on market sentiment and creating uncertainty. January consumer spending fell by 0.2%, missing expectations. This has well raised fresh concerns about a potential slowdown in economic momentum. And on a last note, despite Nvidia's strong earnings and guidance, the broader tech sector came under pressure. The Nasdaq composite posted a 2% decline for February, while the QQQ, tracking the Nasdaq 100, displayed a more modest 1.26% drop. What does all this mean for the market? Well, please stick around as we break down this week's market performance, analyze key trends, and explore how these economic indicators could impact major asset classes. As always, don't forget to like, subscribe, and hit the bell button to stay ahead with all the latest market insights. Before we commence the market performance summary, let's go to the charts to infer the short-term expectation of the US large cap market and the Nigerian market, which is the all-share index, to arrive at an unbiased thesis going into the trading week. I have on screen here the Nigeria all-share index, the ASI on the daily time frame. I have the price action on the top, the directional movement index in the middle pane, as well as the relative strength index at the bottom pane. And this is a 10-day RSI. As usual, the plus DMI is the blue curve, the minus DMI is the red curve, the ADX is the white curve. On the price action, I have two moving averages, which is the 20 EMA as well as the 50 EMA. And let's quickly arrive at our thesis, a short-term thesis going into the trading week. I'll be working on the daily time frame. You can clearly see that the price action after this very strong rally that commenced sometimes in December, we noticed within the last few days there's been some sort of cool off. And I remember in my video last week I highlighted that the RSI was overbought, and by probability we expect there to be some cool off, and that's what we got in the last week. You can actually see that since Monday, which is February 17 here, we actually have seen the price just actually return back to the same level on Friday. And you can actually see on the RSI that the price has actually moved away from the overbought region and is now trading within the normal bound of between 50 and 70. So clearly we've seen the cool off or the cool down that I identified last week. That should be our expectation going into the week. And so based off that, I expect that going into this week we should see some form of the rally, which is the bullish momentum, continue into this week. So that is my expectation for the ASI going into the coming week. The next ETF that we want to look at is VTWO, which is actually showing a different behavior to the ASI. VTWO within the last month has been trading sideways, and clearly you can see that by looking at the ADX. The ADX since December has relatively been below 20, and when you have a below 20 ADX, it actually means the market is trading sideways or consolidating, and basically there is no trend. So and that is what we have seen in the large cap market, which is VTWO. There's been no trend. The market has basically been trading sideways. No matter how you want to go about it, the market has basically been trading sideways. Last week we actually saw the price action trading out of this parallel channel, which has been established since October 2023. And if that had confirmed by the end of last week, it will have been a reason of concern that might actually signal that the market might be pulling back. But luckily, we actually saw the market close back into within the parallel channel to kind of give investors or traders some confidence that this bullish momentum that started since October might still be on the cards. However, what I would like us to see on the chart is that the price action has these two moving averages on top of it. And so these are the next short-term resistance that the price action has to overcome to continue its momentum back to the midline of the channel or the top of the channel. So yes, so we have to look at how the price action is going to interact with the moving averages. Remember, whenever the price is trading below the 50 MA, there's a general consensus that the market is bearish. So the VOO is actually bearish right now because the price action is trading below the 50 EMA. If we look at the ADX, the directional movement index, you can see that the minus DMI is above the plus DMI, which is actually a bearish signal. The positive undertone there is that the ADX is below 25. Therefore, this bearish signal is not a bearish trend. The ADX being below 20 implies that there is actually no trend and the market is trading sideways or is consolidating. When we look at the RSI, we can see that the RSI is less than 50, which is generally bearish. And definitely you can see that the market has been oversold within the last few days. And on Friday, starting from Thursday, you can see that the market started to move away from the oversold region. And that's why it's going back upward. But it's still generally bearish. The bullish fanfare starts when the RSI is above 50. So what is my verdict on the VOO going into the new week? I expect the bounce we saw on Friday because the price action was overbought. However, the price action is facing resistance with the EMA, which is the 50 EMA and the 20 EMA. So these are like bricks that are brick walls that the price action has to break through to continue its rally to at least the next short-term resistance, which is at 558. And so yeah, that's the summary of the two markets, which is the ASI, the Nigerian Share Index, and the VO, which is the US large cap market. Before we begin the previous week's market summary, I'd like to call your attention from minor changes that I made into the definitions of what a bullish trend and a bearish trend is. Without wasting much time, the only change that was implemented was the threshold for the ADX value. Previously, I went with a threshold value of 20 in identifying a strong trend. With some little research, I've identified that the most appropriate value for identifying a trend is 25. That implies that we have a bullish trend when the close price is above the 20 EMA, the plus DMI is above the minus DMI, and the ADX value is greater than 25. Similarly, we have a bearish trend when the close price is less than the 20 EMA, the minus DMI is greater than the plus DMI, and the ADX is greater than 25. You have no trend or sideways trading or consolidation when you neither have a bullish nor bearish trend. Let's get straight into the market performance. We begin that by looking at the returns of the US large caps market tracked by the ETF VOO, which delivered a week-to-date change of negative 1.32%. Year-to-date, VOO has delivered positive 1.40%. The short-term bias on the daily time frame exhibits a neutral trend, while the mid-term outlook on the weekly chart is neutral. The Nasdaq, represented by the ETF QQQ, this week saw a change of minus 3.73%, bringing its year-to-date performance to minus 0.60%. The daily time frame presents a neutral bias in the short term, while the weekly chart indicates a neutral bias in the midterm. US small cap stocks, measured by the performance of VTWO, this week posted a decline of minus 1.84%. Year to date, VTWO has delivered a return of minus 2.82%. In the short term, the daily time frame shows a neutral bias with a bearish trend emerging, and the midterm outlook on the weekly chart is neutral. Canadian equities, tracked by VCN, printed a weekly change of positive 0.87%. Year to date, VCN has delivered a return of positive 3.41%. The short-term trend on the daily time frame is neutral, while the midterm outlook on the weekly chart indicates a bullish trend. The Nigerian market, tracked by the index ASI, this week saw a change of minus 0.62%. Year to date, ASI has delivered a return of 4.75%. The short-term outlook on the daily time frame points to a bullish trend, and the midterm outlook on the weekly chart indicates a bullish trend. The oil commodity, tracked by the ETF UCO, recorded a weekly decline of minus 0.65%. Year to date, USO has delivered a return of minus 0.44%. The short-term outlook on the daily time frame points to a neutral trend, while the midterm outlook on the weekly time frame also indicates a neutral trend. Finally, Bitcoin, tracked by the ETF GBTC, declined by a whopping 11.79% this week. Year to date, Bitcoin prices exhibited a performance of negative 10.01%. The short term outlook on the daily time frame is neutral, with a bearish trend emerging, while the mid-term outlook on the weekly chart indicates a neutral trend. Let's get into the next section of the video, where we look at the smart ETF portfolio for the month of February. And it's a new month, everyone. Happy new month. Which means it's time to review the performance of the smart ETF portfolio against the benchmark SPY, the ETF that tracks the top 500 companies in the US market. For February, the smart ETF portfolio outperformed the SPY by 3.73%. The selected ETFs, FEZ and XLP, delivered returns of 5.15 and 2.82% respectively over an average holding period of 14 days, significantly outperforming the SPY's 0.25% return for the month. Overall, the February trades achieved an average return of 3.98%, surpassing the 2% minimum profit target and reinforcing the effectiveness of the strategy. Let's be hopeful to see what March brings. If you would like to understand what the ETF portfolio, the mechanism behind the ETF portfolio, I recommend that you look into my video titled Market Digest Week Ending January 5, 2025. In parentheses, my ETF tracking tool, to kind of have an understanding of the pipeline and how we arrive at our monthly picks for trading the market. The goal of the portfolio is to outperform the SPY every month, and my goal out of transparency is to present that result out to the audience. The portfolio is actually still in testing and is only available to a few selected friends of mine. But hopefully, once we have statistically significant results, we can look into releasing that for commercial use. Going into the new trading week, the markets are showing a lot of neutral sentiment, with no strong trends emerging in the short term for US large caps, which is the VTWO, the Nasdaq, that is the QQQ, as well as oil commodity. However, we are starting to see signs of a confirmed bearish trend developing in the US small caps and Bitcoin in the short term. On the other hand, Canada and the Nigerian market stand out, with the Canadian market maintaining a mid-term bullish trend, while the Nigerian market is showing strength in both the short and mid-term. As always, guys, it's important to stay adaptable, and let's see how this trend will evolve. Will small caps and Bitcoin confirm their bearish signals? Will Canada and Nigerian markets continue their momentum? Let's see how all this plays out in the coming weeks. If you found this update helpful, don't forget to like, subscribe, and drop your thoughts in the comments below. See you next time. Bye-bye.